Oracle is one of the hottest stocks on the market. Shares are up about 70% in the past year, and this is the biggest name in AI today. The company announced a $300 billion deal with OpenAI, increased their remaining performance obligations, but that's what sent shares higher in September. But is there risk hiding under the hood for Oracle? I think there's more than you may realize. So I want to dig through exactly what the company's finances look like and why this AI building could be riskier for Oracle than it is for a lot of its hyperscaler competitors. Now let's dig into the company's cash flow, because one of the ways the companies are going to be able to pay for these AI buildouts is just simply with the cash that's coming in from their business. Oracle does have a strong cash flow business. There's about $20 billion in operating cash flow, but that does not cover the capital expenditures that they're currently putting in the ground. In the past year, CapEx has started to exceed operating expenditures, and that's even before we start to see the investment that's going to be needed to serve OpenAI's demand starting when that contract begins in 2027. On top of the cash flow challenges, you have serious balance sheet challenges. Going back to a decade ago, Oracle had a net cash balance on its balance sheet. It's typically had some debt on the balance sheet, but that debt did not exceed the cash that they had. That changed in 2019 as they continued to buy back stock at an extremely rapid rate. The shares outstanding have dropped, but so has the leverage in the business. As of the end of the last quarter, there was about $100 billion in debt on the balance sheet. That debt has increased. Oracle recently issued another $18 billion worth of debt, and there's only about $11 billion in cash on the balance sheet. So the leverage in Oracle's balance sheet continues to go up, and that will only increase as these AI projects are built out. Now, the good news is the remaining performance obligations that Oracle has increased to over $455 billion. They think that's going to exceed $500 billion within the next couple of quarters. The thing to note is that $300 billion of that came from OpenAI. So we have to think about the counterparties for these AI deals, just like you do if you're a bank. At the end of the day, Oracle's business, the growth business that they have today, is based on how much does it cost to build out these AI data centers, and then what's the return on that investment? And quite frankly, we don't know the answer to that yet. The neoclouds are just barely starting to scrape profitability. Oracle's big investments in artificial intelligence data centers haven't really shown fruit yet. We have not seen a full cycle where Oracle needs to depreciate and then replace GPUs, so we don't know what that depreciation cycle should look like, if there's going to be write-offs, what the cash flow needs are. There's a lot of questions facing Oracle, and this is the hottest name in AI today because it's signing these absolutely massive deals. But think about the risks that are involved as well. There's operating risks, signing a huge deal with OpenAI, who does not have a profitable business and currently does not have revenue to back up $300+ billion worth of spending over the next 7 or 8 years. And Oracle's balance sheet is not exactly pristine. This was already a highly leveraged business last year. It's even more highly leveraged today, and that will likely continue. The company may even need to sell stock. That's probably a good way to delever the balance sheet a little bit, is use the higher equity value that they have in shares. But again, Larry Ellison has been buying back stock for about a decade in order to own more and more of Oracle. He may actually be a hindrance to delevering the balance sheet, willing to take risks that a lot of other hyperscalers are not. The other risk that Oracle has is it is completely dependent on NVIDIA for its GPUs. There is no internally developed GPU. There's no internally developed model. They are really just a commodity cloud shop at this point. That could be an advantage in the future. There are high margins sometimes in these commodity businesses, but commodities are often very cyclical. And that, I think, should be a worry for investors. We are in the boom times of this cycle in artificial intelligence, of the amount of investment. But if that investment doesn't have a positive return, when we find out those returns aren't maybe what we thought they were, that's when the stock could fall and you see that debt become a real problem for Oracle. So keep in mind these risks if you're looking at Oracle stock. They may have a big impact on the stock's performance long term. But let me know what you think about Oracle and the risks they're taking in AI today. And don't forget to check out fool.com/invest for our top 10 stocks to buy right now. Thanks for watching, everybody. We'll see you here next time.